traders at UBA say they expect bearish sentiments in the bond and Treasury bills market to persist owing to the illiquidity in the market and T-bills auction settlement. Kenneth Onuoha, team member, Assets and Liabilities at UBA, joins me for a weekly wrap of the market this week. Kenneth, thank you for joining us today.
Thank you for having me, Esther.
Let's start with liquidity levels. Talk to us, and also after that, walk us through key segments of the market today and where you saw the most demand.
All right, thank you once again. System liquidity, in keeping with the theme from last week, was pretty depressed this week. We saw system liquidity open on Monday at about 1.4 trillion. However, we did notice that largely due to receipt of CRR refunds by some banks, we saw the system liquidity improved to about 1.1 trillion as at Wednesday. However, following the settlements, excess allotments at the NTB auction, we saw this depressed further to about 1.4 trillion as of yesterday. Clearly, this has been the theme all week long. We've seen the system liquidity hover around the 1 trillion mark for an extended period of time now, and this has obviously led to OBB and overnight rates to close at about 31.65 and 32% levels respectively. On the bond side, the interesting bit would have been the bond auction that's supposed to come up next week. However, the DMO just released the circular stating that, a notice rather, stating that the auction has now been moved to the 22nd of July due to unforeseen recent developments. So we were anticipating a bond auction of about 300 billion, but that has now been moved 1 week further to the 22nd of July. On the local side, there's been very little actual happening there. We've seen a lot of cherry picking along selected maturities, largely due to the illiquidity in the system and the general interest in NTB, largely because of the attractive yield levels seen on the NTB. On the Treasury bill side, we have seen the NTB auction happened on Wednesday. We saw 166 billion being put up on offer by the DMO. Subscription levels hit about 308 billion, and then the actual sale was about 207 billion. We saw stop rates being maintained on the 91-day and the 182 days respectively at about 16.3 and 17.44% respectively. But then the most interesting bit of business happened in the long end, where we saw the stop rates inch up by about 56 basis points to close at 21.24%. Notably, this is the highest we've seen stop rates print since March 28, and that was quite interesting to see. Generally, that's been the
well, interesting indeed. I'm not sure you mentioned it, but did you talk about the newly issued July 2025 paper? What can you tell us about that?
Oh, I've seen a lot of activity there. It printed at 21.24, and but then we do know that owing to the liquidity constraints in the system, we've seen a lot of people trying to meet up with their unmet orders from the auction. People who are unsuccessful were trying to meet up with the unmet orders of the auction. Currently, it is trading at about 20.20 levels, and that's pretty much what's happened there.
Right. Now, for the FX market, I know that the CBN intervened Thursday, correct me if I'm wrong, but we still saw Naira weakness continuing, still trading above 1,500. But what can you tell us about where the Naira traded at today and your outlook for the trading band in the coming week?
Right to that, actually, we did see the Naira strengthen against the USD yesterday by about 47 basis points, now to close at about 1,554 Naira levels to the dollar. Now, this is on the back of consecutive intervention by the CBN. We saw FX sales to banks. The market color showed that this was about $3 million yesterday, and we saw the interesting bit of business happened was that the rates at which it was actually sold was at about 1,540, which is quite reflective of what the market is currently trading at. And that, of course, led to an increase in turnover to about $348 million. And then that also led to the appreciation we saw in the Naira to the dollar.
All right, Kenneth, we'll leave it there. Thank you for talking to us today. We appreciate your time on the show, and of course, have a great weekend. Kenneth Onuoha, team member, Assets and Liabilities, and UBA.